Hi, my name is Christopher Westfall. Today I'm answering the question, how to pick the best Medicare supplement company. I've got a few criteria you probably need to look at before you make this decision, or if you're with a Medicare supplement company and you're not happy with the rate increases, how to find another one. Today, this is by way of an update on one of the carriers that was in the marketplace, now no longer available through independent brokers. I'm going to show what led to its demise, how we've kept our clients and our viewers on this YouTube channel up to date the entire time, and kind of what's been happening behind the scenes that we have not talked about until now. So today, here's a Medicare supplement update for you. Picking the right Medicare insurance company can do several things for you. First of all, get you approved. If you're not in open enrollment, in most states, you have to go through health underwriting. Knowing which company will match your health and give you the best rate is pretty critical. And the most important thing is this company going to be stable going forward? Well, my crystal ball doesn't work perfectly every single time, but experience has taught me there are certain things to look for when making a recommendation for a Medicare supplement insurance company. My agency is able to sell every Medicare supplement company from coast to coast. We have, however, limited that number down to companies that match our criteria. Going to get into that in just a second. Let me tell you what's been happening behind the scenes. This company, I covered in a video about a month ago, was putting out the rate increases in anticipation for MACRA. MACRA started January 1, 2020. It eliminated the ability to get first dollar coverage on Medicare supplemental insurance. That means Medicare Supplement Plan F and Medicare Supplement Plan C are no longer available for people who were not grandfathered in. That is, people who were eligible could have bought a Medicare supplement policy prior to January 1, 2020. This company started early, raising the rates like I predicted would happen back in 2015, and I brought that to our viewers' attention. This latest revelation, what's going to happen in March with this company, Everest, shows that I was again right. 28.2% rate increase announced on Plan G, 20% on Plan F. Plan F, to buy it today, and unless very weird circumstances, is just absolutely insane, in my humble opinion, where you can guarantee that every 5 years your rate would double your monthly premium. It's just crazy. So Plan G now is even worse than that in some cases, in some states, in some carriers. But again, what we've been recommending for the last 18 months at least is Plan N. If you don't know what Plan N is and why it's so stable going forward and how MACRA affected it and continues to affect it, I encourage you to look at the report, which is a graphic report where you can see it graphical. It's on plannmedicare.org. It's a website, Plan N is in November, Medicare.org. Go look at that when you have a minute. So this is the update from behind the scenes. This is an email that one of my agents received early January 2020, telling him that he was being terminated because he was submitting the wrong kind of business that Everest did not want from him. The email says, "This email serves to inform you that the company has initiated the contract termination of you from the following carriers." So that's Everest. "This action was facilitated by the home office management overseeing this program, the termination, blah, blah, blah." It goes on to say, details are noted below. "The current premium to claims loss ratio associated with your business is currently running at 213.96%, which means they're losing money on his people that he brought to the company. And typically in the past, when we've seen this happen, it's been with very, very small companies, and the ones that come to mind are family-owned companies that we've seen in the market that are so small that they don't even allow themselves to be rated with AM Best. They're so small. And these very small companies have to watch every penny very closely. And they do it by going agent by agent and seeing if the agent's business that they brought them was good or bad. How do they know? Well, was it profitable, or did those people get sick too much? If those people got sick too much, very small companies that are watching pennies for whatever reason might terminate the agent. Now, it's not in their contract spelled out so clearly that if their mix of business is not so good that the company likes it so much that they can terminate them for it, but it's kind of an unknown unspoken thing in the world of Medicare insurance. If your people are too sick, they could terminate you, the agent. Interesting. So in this particular case, it says, of the 19 cases that this agent has submitted to date, all but one are open enrollment. They don't like that very much because open enrollment means they can't screen these people. They have to take them. Everest seeks a mix of business, and it would appear that your business model is geared toward T65. That is, seniors turning 65 in open enrollment, and the company has no choice but to accept them. So T65, which is not a good fit for Everest, as this type of business runs higher loss ratios in general. Thank you for giving us a try. Yeah, he just tried it out with 19 of his clients that he brought to the company that he can no longer represent. Well, seeing this is kind of the writing on the wall. When you see a company is going through, and I'll use the term in my personal opinion called nitpicking, every particular agent, every particular client that they have, this indicates to me that there may be a problem. And so the next communication was from the company to all independent agents, January 27th, some 3 weeks later, 2020. And it says, "Hello, agent. As a contracted agent with us, we would like to advise you that we have decided to limit future Medicare supplement production to one single distributor. As a result, effective January 31, 2020, we will no longer accept applications for Medicare supplement business from currently contracted agents. As you may have concluded from our state-specific rate announcements over the last year," we made a big conclusion from that, "our block of business has been undergoing various changes due to the business mix, the implementation of MACRA," who saw that coming, "new competitor paper options," that means new options in the marketplace, "and the continued shift of medical costs from inpatient to the outpatient setting. Everest believes a more focused, controlled distribution through one single distributor responsible for new sales going forward will best serve our existing and future customer base. Please understand that this decision was made after careful consideration of the block, its customers, and your contributions to our effort. Everest admires the work that you do on behalf of your clients and appreciates the relationship we were able to have with you and will continue to have with you with respect to servicing our existing policyholders. We wish you the best success in 2020 and beyond." Then it goes into the frequently asked questions as to how this is going to take place. So we, the independent agents, can no longer sell Everest. Why? Because they're sending them too many clients who just were not profitable for them. So this brings me back to, how do you pick the best Medicare supplement company? Do you want to pick a company that you've never heard of before, that's a name that's not been around for long in the consumer space, that may be just brand new in the space and has no insured lives and has the potential of this, which is no new blood is going to come in, at least from all the independent agents around the country, pouring in insured people to spread the risk, which is the key definition of the word insurance. That means to spread the risk among many people, to soften any impact on any one person. And the more people that you have, the bigger the spread of the risk is, the less of the impact it should be on any one person. So we're going to look at my buying criteria for Medicare supplements and how you can avoid being in a company that is then at that point cut off from the potential of new people. And what we've seen when that happens in the past is the rates just begin to run away. As a matter of fact, in the frequently asked questions, they were asked what they're going to do with future rate increases. The answer was, we can only raise rates in most states once per year. So we're doing it right now, and we're going to do it again. And then it says in other states where we can do it more than once a year, that's probably going to happen. So this is not a place that I would want people to be in if there's another option. Get out of companies that are cutting off their old block of business or not accepting a wide amount of new people coming in. That's not a place that you want to be. Here's my criteria. You need to look at the number of insured lives. Again, spreading the risk is the whole purpose of insurance, so that you don't have a massive rate increase based on a limited experience with a small finite group of people. that pool of insured lives needs to be growing. It needs to be flourishing, adding new people, adding younger people. When that happens, then we see a mix of business that's going to tend to keep our rate increases low, so that if, God forbid, you are on a Medicare supplement plan, you experience a health catastrophe. Maybe you get a chronic disease. Maybe you have a heart attack, stroke, cancer, some acute situation that now makes you stay on that plan for at least 3 years going forward. You can't change plans, because in order to change plans in the majority of states in America, that requires you to go through health questions. So if you're going to get stuck on a plan, looking at this criteria means everything, because you may have just this one shot. So many people are turning 65 or leaving their employer plan now. They are in open enrollment, but they already have chronic conditions. They already go to the doctor plenty of times, or they may have a condition that may lend itself to never being able to change again in the future. And when we literally have people's lives in our hands, their financial future in our hands, we have to do the best job by them that we possibly can. This is what we look at. What's the number of insured lives? Is it growing, or is it stagnant? Is it a block of business that's been cut off to never again get any new people? That is a nightmare. That's a scenario for disaster. The second one is time in market. Is this a brand new company? One of the biggest indicators that I have with my hundreds of agents around the country, we are always approached by a brand new company, brand new carrier that says this: we will pay you $150 or $200 or $250 for every new application you send us. How in the world can they do that? It's not profitable to do that. First of all, they're living on borrowed money. Investors are throwing money at this thing, hoping that they can light a fire. It catches on in the brokerage community, and one day it will be profitable. So how do they do that? They need to dump lots of enrollees into that plan. And how they do that is they incentivize us, the agents, with cash bonus money to write this brand new plan that most of the time no one's ever heard of, has no insured lives, and just started yesterday. Anytime we present rates to somebody that's a potential new customer, we will show all the brand new, what I call Mickey Mouse, brand new startup companies that have no traction in the market, no insured lives, just started yesterday, and we'll compare that to the stability and the companies that we represent. And we'll tell them the contrast and full disclosure, the good, the bad, and the ugly. And when there's an agent incentive involved and we're getting deluged with all this, we'll give you this bonus money, we'll pay for you to go on this trip, we'll give you this bonus, this bonus, this bonus. It tells me that the company is desperate, and 9 times out of 10 when we see those kind of things, it is because the company itself can't get traction. They're trying to get traction by bonusing the agents to have the agents, in my opinion, for what that's worth, compromise their ethics, knowing that this is the right criteria, knowing that this is where they would put their mother is based on this criteria. However, they got to pay the bills. One of the interesting things about contracting with these insurance companies is they run a credit check on them, on us, the agents. Why is that? Because I believe if an agent is in bankruptcy right now, or has a 400 credit score, if that's even possible, then they're more likely to compromise their ethics for anything that has to do with a commission and not do the right thing by the client or by the insurance company. Similarly, if you've got a desperate agent who's compromising which plan they're going to offer based on not the carrier's time in the market, the number of insured lives, the integrity of the company in the background, but based solely on an incentive of cash that's given to them, you should probably ask your agent when you're talking to them, is there a bonus attached to me going with this no-name company that I've never heard of before? There's something to look for. Number 3, stability on rates. And again, if you've got a brand new fly-by-night, just started, God bless them. They may be going to be a good company in the market, but no one's heard of them before. They have no experience in the market. They have no insured lives. They just started yesterday or within the last 6 months or even the last year. They're still in that startup phase where they're allowed to lose money by the Department of Insurance because they're getting things going. They're paying these incentives and all that. They have no stability on rates. They don't even have one rate increase to their name. So how can you know what this company is going to do? And again, the rate increases are based on the experience of their block of business. If their block of business is 100 people and 30 of them got really, really sick, causing millions of dollars in claims, your rate increase is going to be through the roof. But again, you don't want to be the guinea pig for a brand new startup company that has not even any experience to speak of, no rate increases in the past to even look at. So we look at stability on rates of a new carrier, or a carrier that we're going to represent in the marketplace. This is a biggie. If you've ever had to call a company and press 1, press 2, press 5, whatever, then you get to someone with either a foreign accent or someone who answers the phone with the wrong company name, how could that be? It can be because they've outsourced their customer service. A lot of these small startup companies, brand new in the Medicare space, are outsourcing all their administration. Everest is one of those companies. They outsource to what's called a TPA, a third-party administrator that handles the business for a lot of small companies that just don't want to be bothered for whatever reason, for cost mainly, I'm sure. They don't want to be bothered with the cost of staffing up, getting phone lines, getting computers, paying staff and training them to answer customer service issues, billing and so forth, claims and all the rest. So if you've got a brand new startup company, one of the things you should ask the broker or the company is, do you provide your own customer service, or is it outsourced to a third-party administrator? What's interesting to me as I talk to agents around the country is many of the agents don't even know that of the carriers that they're representing. Had an agent the other day we did a video consultation with. He did not even know that the company that he was captive with, which means he can't sell anything but this one company, they outsourced all of their customer service to someone else. He's like, oh, that's why they're in Clearwater with their address, even though I'm sitting in Kansas City. That's why. Yes, that's why. And if you want the best customer experience for your clients, you need to know who's going to handle that customer service. Let me give you an example, throw in some names in there. Don't want to throw anybody under the bus, but if I'm representing a company like Aetna, Cigna, Mutual of Omaha, those companies actually have a floor of hundreds of people on the telephone with instant access to your records, and they can fix banking issues, billing issues, claim information. They can explain things in pure, easy English. Why? Because they're committed to the industry and to the clients enough that they've invested enough, been around long enough to afford the fact that they can have somebody physically sitting in their office answering the phone. They can control the quality of those conversations, which is everything. So if you don't want your business outsourced to somebody who's handling the business for maybe dozens of different micro little brand new startup companies, then you have to look at, are they internally handling their customer service, or is it outsourced? It's a very legitimate question, and the companies, these cheap companies, will argue it's all the same experience. I mean, this is not like rocket science. We're handling billing, we're handling claims, we're answering questions about Medicare. It's not that complicated. I would argue, having a mom that is a consumer in the Medicare space, it makes all the difference in the world. Her stress level, lack of anxiety, is directly tied to the fact that can she get somebody on the phone that knows what they're talking about, can instantly access her records, and can fix an issue without having to get somebody else's permission, either back in the United States or back at a home office at an insurance company. Knowing whether your company outsources or handles their own customer service can be critical. And it's one of our criteria when we decide which companies to represent for our clients. Again, we'll give you all the information on who's out there, but we'll also make a recommendation based on our existing clients, thousands of existing clients' experience with these insurance companies and what's going on in the market. Experience matters. If you're just starting in the Medicare space as an insurance agent, you're trying to learn all this kind of stuff. And we have a website called MedicareAgentTraining.com, where we actually have thousands of insurance agents that learn the market based on our experience, collectively and individually. And we share this information with insurance agents. But for the agent that's out there by himself, working out of his apartment, on the phone, dialing for dollars, calling you, does he really have the experience? You need to ask this question, really. What is your experience in the market? How long have you been doing it? Who are you licensed with? How many companies do you have in my marketplace? Who outsources and who doesn't? How long has that company been in the market? What are their rate increases up to date, like up to current time? And these are questions that you have to ask, but obviously, experience matters, doesn't it? Again, I encourage you to see the latest briefing post-MACRA after the law has now been implemented. Go over to planinmedicare.org and see that briefing. Please pass that on to anybody that you know that's on Medicare and using a Medicare supplement. So they have the freedom and flexibility to go to any doctor across the country and any hospital that accepts Medicare without the limitations of networks. If they are on a Medicare supplement, they need this briefing, I'm telling you, because agents are not telling them about it. My name is Christopher Westfall. I hope this has been interesting to you. The most important fact is, yes, we have a carrier leaving the market right now. We could have predicted this based on all the criteria that I put right there. We have sold maybe one or two, and we had to because of a guarantee issue situation of this company. But the agents are being terminated. Our contracts are being eliminated right now with this carrier. And I'm so glad to say it was not one of our major carriers because it did not meet this criteria. And just to be a licensed agent, to be able to offer everything in the marketplace doesn't mean you should offer everything in the marketplace. We have to have standards. Standards come based on experience, and experience leads to happier clients that refer people to you rather than angry clients that leave nasty things about you online. It all comes back down to, what is your standard? What are you recommending? If you'd like to have us look at your Medicare supplement plan so we can make a recommendation as to what might be good for you as you're considering what to do on Medicare or already on it, please contact us at the information at the top of the screen, and I highly suggest hit that subscribe button to this YouTube channel, because as things change in Medicare, and they are a-changing, it's important that you stay up to date. Please share this video with someone you care about. Thanks so much. God bless you.